This is Ramajayam, register number MA20505, a study on working capital management in Chennai Port Trust under the guidance of Mr. Prabhu, Assistant Professor of Department of Management Studies, Well-Tech Ranga Sangha Arts College, affiliated to the University of Madras, April 2014. Introduction. Working capital refers to the funds invested in current assets, that is, investment in stock, sundry debtors, cash and current assets. Current assets are essential to use fixed assets profitably. In the words of Shubin, working capital is the amount of funds necessary to cover the cost of operating the enterprise. Normally, working capital means current assets minus current liabilities. The working capital may be positive or negative. The term working capital refers to the amount of capital which is readily available to an organization. Company profile. Chennai Port, the third oldest port among the 12 major ports, is an emerging hub port in the east coast of India. This gateway port for all cargo has completed 128 years of glorious service to the nation's maritime trade. Maritime trade started way back in 1639 on the seashore Chennai. In the first couple of years, the port registered traffic of 3 lakh tons of cargo handling 600 ships. The Chennai port is one among the major ports having terminals, shunting yard, and running their own railway operations inside the harbour on the east coast. Industry profile. Ports are an important form of the infrastructure in the Indian economy. India has an extensive coastline of about 7,517 kilometers spreading on the western and eastern shelves of the mainland as well as along the islands. It has a well-established port infrastructure covering 12 major ports and 200 minor intermediate ports, non-major ports spreading across 9 coastal states. These major ports come under the purview of the central government, while non-major ports, minor intermediate ports, come under the jurisdiction of the respective state governments. My objectives of the study. Primary objectives: to find out working capital position with reference in Chennai Port Trust. Secondary objectives: to determine the relationship between current asset and current liability of the company, to analyze the profitability of the company, to examine the liquidity position of the firm, to find out the financial performance of the company. Needs of the study. Working capital is the amount of funds which a company needs to finance its day-to-day operations. The purpose of the study is to analyze the various concepts of the working capital, to find out the performance of working capital management in a concern. Now I am ready to tell about my scope of the study. The management of working capital, like inventories, receivable, cash, and marketable securities, payable and long-term loans, have given components its important of the study. It also helps to maintain proper balance between profitability, risk, and liquidity of the business significantly. By managing the working capital, current liabilities are paid in time. The study can be elaborated in future order to make an in-depth analysis of various aspects of working capital. Limitations of the study. The reliability of the analysis depends upon the accuracy of the data provided. The information provided in the company balance sheet is only the data source available. The information available in the balance sheets are taken from the published annual report. The data has been analyzed for a period of 5 years. Review of literature. Working capital management entails short-term decisions generally relating to the next 1 year period, which are reversible. The management of working capital involves managing inventories. H12 B 1990 stated that cash is king. So the money managers who share the responsibility of running this country businesses, and with the big banks demanding more from their prospective borrowers, greater emphasis has been placed on those accountable for so-called working capital management. Working capital management refers to the management of current or short-term assets and short-term liabilities. Principles of working capital management policy. Principles of risk variation, that's called current assets policy. Principles of cost of capital. Principle of equity position. Principles of maturity of payment. Research methodology. Research is an organized, systematic, database, critical, objective, scientific inquiry or investigation into a specific problem undertaken with the purpose of finding answer or solutions to it. In this project, research has been descriptive study which aims at portraying accurately the characteristics of a particular group or situation. The major purpose of descriptive research is description of the state of affairs as it exists at present. Tools and techniques used for analysis. Comparative financial statement, working capital, ratio analysis, common size balance sheet. Comparative financial statement. The statement summaries and present related data for a number of years, incorporating therein changes absolute and relative in individual items of financial statements. The statements normally comprise comparative balance sheets, comparative statement of change in total capital as well as in working capital. Working capital. The financial strength and weakness of a firm can identify with the help of financial analysis. We are properly establishing the relationship between the items of the balance sheet and the profit and loss account. Ratio analysis is a powerful tool of a financial analysis. Ratio analysis. A ratio is defined as the indicated quotient of two mathematical expressions and as the relationship between two or more things. Ratio analysis is used as an index of yardstick for evaluating the financial position and the performance of a firm. This technique is very much useful in the assessment of working capital requirement and also to know the performance of the company. Common size balance sheet. It is a financial statement displaying all items as a percentage of a common base figure. Such a statement. It may be useful for noting change in the relative size of the various elements. Findings of the study. The working capital is increased during the year 2008 to 2009 to 2010 2011 and it has decreased in the year 2011 2012 and 2012 to 2013. The current ratio of the company has changes in every year. It was 1.44 during the year 2008 2009 and minimum 1.02 during the year 2011 2012. Quick ratio of the company is 1.43 during the year 2008 2009 and minimum value 0.13 in the year 2009 2010. Inventory turnover ratio of the company is 29.72 in the year 2011-2012 and as maximum value in the year 2008-2009 as 51.36. Cash position ratio of the company is 0.62 in the year 2011-2012 and 1.00 in the year 2008-2009. Suggestions. The company should increase its sales volume so as to result in optimum utilization of capacity and maximization of profit. The high cash holding of the firm should be kept for any other purpose such as investing in the investments or discharging the loans. The company utilizes the maximum long-term funds through bank and financial institutions. The company can utilize the reserves and surplus by either capitalization or can invest some money somewhere as investments to get benefits. It is obvious that the working capital which is exposed to very much liquid. Conclusion of the study. Working capital management, it is an excellent way for an organization to improve their learning. Working capital management ensures a company that is sufficient cash flow in order to meet its short-term debt obligation and operating expenses. The project has been done on the study and analysis of working capital in Chennai Port Trust. The analysis was done based on the information provided by the firm. The major parts of analysis based upon the ratio calculation. Thank you.